right, testing. 1, 2, 3, testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Good morning, everybody. Hey, it's a Monday. You're still alive. That's a good sign. Lots to be grateful for. One of them is you have the foreign exchange market in front of you. Yeah, it's an opportunity to create value. So today I propose we do some technical analysis, some fundamental analysis, go through the calendar, maybe a look at the COT report, Commitment of Traders report, and address your questions and concerns. So without further ado, let's get on with it. Let's go! So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So happy day, everybody. Happy day. It's a Monday. Nice. A great opportunity to come together as a community. Get ready. Share our analysis, share our thoughts. Build our trade plans for the next few hours, the next few days, the next few weeks, the next few months, even the next few quarters. Very cool. Ask questions, get involved, take notes, all that kind of stuff. And I think you will be golden. Also, let me know how I can help. I am here to serve. So let me know how I can help, and I will do my best to provide that. Please click thumbs up. Tell YouTube this is quality content. Please leave comments on the recordings. Please treat each other in the chat with dignity and respect. If you're new to our community, please subscribe so therefore you get notifications when I hit the live stream. And what else? I'd like to thank Traders Way for being part of our community. You're a trader, they're a broker. They want to set the table, light the candles. Blip, blip, blip. I'm pouring the wine, the wine of education. Maybe, just maybe, you guys can fall in love. So if they can earn your loyalty and respect, perhaps you'll choose them to be the execution partner for your successful Forex trading business. So please start the relationship today. Visit tradersway.com, open up a demo account, download MT4 or MT5. You can have an ECN account, fixed spread account, variable spread account. Pick the one that you like. Give it a try. Give them an opportunity to earn your business. I think I'm going to move this over there and that over there. Is that okay? Yeah. Oh, no. Yeah. All right, cool. Coolio. I want to see the chat a little better. All right. That'll do, pig. That'll do. So how you doing? You look good. Nice. Looking around the world here. Aussie weakness, Euro, like, what do you actually call that, right? Is that strength? Is it neutrality? What is that? So I'm just waiting for my drawing tool to show up. Here we are. So how would you call this? Okay, so you got this, and then you got this, and then you got this, you got this, you got this, you got this, okay, you got that, and you got, all right, clear direction. Well, I think what we're going to do is we're going to call this dollar strength. We'll call this yen strength. And when they happen together, it's a flag for risk off. So things like commodity currencies come down, and you'll see CAD have come down, Aussie have come down, and Kiwis come down. So commodity, commodity, and you're like, okay, all right, fine. Okay, you see what I mean? Just sort of like, okay. So, don't overtrade. Those are not the market conditions that you're looking for to make a bunch of trades, so you continue to wait. Okay? Simple enough. So, let us move to the next step. I'll move us to... Oh, my God. Stupid Windows. God dang it. Windows is stupid. All right. Cool. Nice watch, dude. All right. Calendar. Let's take a look at the calendar. All right. Let's take a look at the calendar this week. A lot of speeches today. Okay. Yeah, well, we'll have to just be patient, right, Raymond? Okay. So, lots of Fed speeches. And, I mean, they're interesting, right? But what I think about it is, they're trying to tell the market what they're doing. And yet the market likes to debate what they're doing. I'm like, debate? There's 3 speeches in one day. So they're doing their best. RBA tomorrow. Okay, Governor Lowe is telling us what they want. That's cool. Take a look at that. I mean, there's nothing else going on in the market right now, so you might as well do this work if you hadn't already been doing it before. Okay, GDP out of the UK. Once again, sort of backward looking. We know, I don't know, not that important. German unemployment, okay, that's important. So we got that on Wednesday. ADP, which is another dumb prediction, that's important here. So that's on Wednesday. Canadian GDP, okay, shouldn't be that crazy. I mean, the thing with GDP is you should be able to predict it because you have the access to the information. You can build your own GDP models, right? So it shouldn't be radically amazing. It shouldn't be radically unexpected, right? For example. And then sort of, the Tankan, not a market mover, Kiwi building permits, not a market mover. So really it's the German unemployment, okay, and then ADP on Wednesday. Thursday, we zip over here. OPEC meeting, nice. European unemployment rate, about the same time. We want to make sure we are adding jobs. I mean, that we're in that point of the cycle that we should be adding jobs. So you want to take a look at that. And of course, the dichotomy is, how's Germany doing versus the rest of Europe? Okay. All right. So anyways, the OPEC meeting, that's going to be important for forward guidance on supply. Okay. ISM manufacturing, well, we're a service economy. So the one thing with this is, are we adding manufacturing jobs? I think that'd be so you want to look at the subcomponent of the ISM manufacturing. But like I said, we're a service economy, 70%. So, this is, again, look at the subcomponent to help you with your NFP predictions. And then Friday, obviously, that's the big thing this week. Okay. And that's non-farm payrolls. Okay. So, ultimately, it's a quiet week because we have holidays, right? Thursday is Canada Day. Okay, Friday's non-farm payrolls, and then next week is summer. Okay, are you guys going to be around this summer hanging with me? I got a few trips planned, but I'm bringing my laptop with me. So if you're willing to log in, I'm willing to drag you around. but you're not the ball and chain. You're like a rocket engine for me. Yep. Who's going to be around most of the summer? ICE says, hey, I've been reading about lumber prices crashing and other factors. Some are predicting the pending housing market crash. Any thoughts on that? Yes, stop listening to people like that. Okay? Some are predicting a pending market crash. Okay, great. Stop talking to them. Stop reading those sources. If you're following their Twitter feed, unsubscribe. None of that is helpful and is not that it can't happen, but it's ridiculous. Okay? So, yeah, cut that out of your life. All right. Cool. Robin's like, with a cold beer. Yeah. Where do you get your beer? Do you go to Estonia? Oliver's like, I lost my job, so I guess I'm a day trader now. I'd rather you lose your job in the fall than in the summer. But focus on education if you can, Oliver. Okay. Commitment to Traders Report. Joseph says, let's day trade through the summer. Like, there's a yes and a no to that, Joseph, right? Like, okay, you're going to day trade more because there's less swing and position opportunities because we lack volume and volatility. And without volume and volatility, especially volume, you're not going to have a trend. So why would you trend trade when there's likely to not be a trend? But at the same time, you got to be careful with day trading as well, because it is the summer. It's the same thing, right? So yes, there are shorter term trades, but you can't treat July like March. You can't treat July like October. Okay. Oh, yeah, no, I know the government's policy on alcohol in Sweden very well. What I'm saying is if you're in Finland or Sweden very often, you know, you jump on that ferry, you head out to sea, you hit Estonian waters, and then, boom, the boat has a liquor store, and as soon as you get to sea, the doors open, and you run in, and it's all these Swedes and Finns buying all the alcohol tax-free. All right, cool. So let's check this out. See what's going on. Okay. And this gray up here. Okay, what we're looking at, failure to communicate. I wanted that to be a little more gray than that. Do I have... Okay, so what we're looking at here are people long euro. Another way of saying it is because this is based on futures contracts trading through Chicago, that they're long euro, short the dollar. So they're exiting their euro longs and buying back the dollar because they used to be short dollar, okay, but by coming off, they're long dollar, or at least no longer long euro. Okay, you see that? So another way of looking at it is euro dollar came down, but nobody actually, bought the dollar. Okay. Well, I can't say not everybody, because the second part of the equation that I want to highlight to you is this one. Okay, so now we look at this. This is people essentially shorting euro dollar. Okay. Look at the change. So the people that were short, okay, they were short the euro dollar. There's actually less of them. Okay, the ones that were actually buying the dollars, many of them have left. They're no longer, right? But anyways. Well, so let's filter this. Just focusing on the Fed meeting, okay, kind of thing. There is an increase from here to here of people selling. Okay, so we'll just say right around that Fed meeting, I believe we're catching that. June 16th. Yeah. Okay. All right. So there has been an increase. Okay. But there were more earlier in the year. So it's just in that moment, maybe knee-jerk reaction. So we'll see next week if it'll do that. Okay. Okay. Now you add them together and you get this net. Not a fish net, a pip net. You get this. Okay. Okay. There are less traders in the market now than there were. I mean, as far as market participants, we can see that. Okay. And they're less long euro dollar, as we already know. Okay. But it seems to have more of an impact of people leaving the market than people shorting. Although there are some shorts there. We don't know how long term that is. So we'll look next week at the Commitment of Traders report and see if they added to the shorts or if it was like a weekly swing, them buying off the bottom. I mean, they may buy off the bottom if they get and hope not to get knocked out, right? But I believe we have some. I mean, it's summer. Bottoms will be tested for sure. All right, so let's start. Let's start with the dollar. Coolio. Ooh. Oh. Oh. Oh, I missed it. You son of biatch. Wow, look at that, huh? All right. Too bad. All right, let's start with the piggy. Looking at our trade plan from before. Okay, this is June 18th. So what is that? 10 days ago? Okay. Okay. And now typically you would have wanted that, okay? If we had ourselves a nice little trend, we'd be looking at this right now. So this should be a sign of caution, okay? And one of the things you should be open-minded to is that if we're not trending up now, okay, meaning last week, I guess, this was probably Friday, right? In here. If last week we didn't continue this new up, then we need to form on a higher time frame than an hour a bottom. Okay, this is a bounce. This would be a bottom. Okay. Charlie says you should call it night trading. Well, for me, like if I'm trading Asia, for example, it typically only takes 10 or 20 minutes, sometimes significantly less. So if you can do Asia but not London, that's perfectly acceptable for day trading. Okay. Remember, you shouldn't be showing up to a market trying to figure out what to do. If that's what you're doing, like if you go to London if you go to the Asian session and it takes you 2 hours, okay, then you're not doing things properly. You should already know if you're a bull, and you should have already looked at your charts both monthly and weekly. And so then rolling into daily, it's almost a binary scenario. You sit down, you're either near your price and there's plausibly a setup that's going to take place soon, or there ain't. And you're like, oh, look at that. Done. Right? So anyways. So there's kind of a couple of ways of looking at what we see here. And that's, do you think there's going to be a higher low? And very often you'll want to try to anticipate why. Like, why would it not double bottom? Okay. Why would it not double bottom? Is there a formation to the left, if I back out a little bit more, right, that would make this the right shoulder of an inverse head and shoulders? See, okay, if we're sort of here right now, then you'd want to be able to look left, left of what we see, and say, well, this bottom could form that. And you say, okay, well, in that case, maybe somewhere in this noisy area, you start to consider, well, maybe buying this as a right shoulder. You see what I mean? That might be one reason it doesn't. But if you're a bull, okay, think, why would it not make a double bottom first? And really, don't you actually want it to make a double bottom first? Don't you want a lot of traders on this? Okay. The other part of this is, what if other currency pairs like euro dollar, Aussie dollar, Kiwi dollar, for example, what if they have good technical setups? Will that drag the pound up? Plausibly. But the UK is really messy right now. It's an odd place. There's like giant caterpillars smoking dope running the government. I'm thinking of Alice in Wonderland, right? What's a strange place? It's a strange place. So, and maybe this isn't a UK thing. Maybe it's all governments, but I think there was a statement made like they want to shut the airports down again because of the fear of the Delta virus, but they're not going to do it till Thursday. Well, what the hell? Look, if there's a danger now, shut it down now. Well, we're going to wait we're going to wait till Thursday. You're like, what are you talking about? If there's a problem, shut the shit down now. Lock it up now. Oh, well, that'd be very inconvenient for people traveling. No, it'd be very inconvenient for the people that died because you didn't shut it down quick. But anyway, so there's stuff like that I always think is funny. And I don't think that's a UK phenomenon. But all right, let's get back to the shoe. Okay. So someone might argue that's the support there, and this is an Arctic turtle. Fine. Great. Okay, as long as you're setting up the trade now for later. You're right. Yeah, Jimbo. Yeah, you're probably right there, Jimbo. But ultimately, you know, an effective leader would just like do what they think is right. You know, I mean, especially in a situation like that where people are yelling and screaming at you because you shut down the borders quickly. You're like, what was I going to do? Let people die? You'd rather let people die? Anyways, so make a decision. So anyway, so for us, we need to make our decision, right? Okay. And you might outline this as a plan A and as a plan B. Currently, this is a plan B. And if you believe from what I just showed you to the left that this area is bounceable, okay, is this your plan A as a bull? Okay. Now, as a bear, okay, this is your sell zone. Anyways, so as a bear, you're already done. And if I were me, I would jam a stop because of this lower high, right? Jam the stop and hero or zero. Take this down, okay? But isn't that nice? Like that, even as a bull, let's say if an aggressive bull or a conservative bull bought this move here, that they know this ahead of time. But of course it's 140. So like, how could you miss that, right? Yeah. So you caught it. Yeah. So that's what I'm saying. So now, like, how do you manage it next? I would say if I was a bear here, I want to take it down at least to this. And I might even try. Maybe this is my I haven't hit summer yet attitude, but I'd even try for lower. But the proper attitude for summer is sell at the top and exit at the bottom, or buy at the bottom and exit at the top. Okay, you want to have the mindset, I believe, that really everything is in a range. That's the mindset, right? So if you bought it here, there's your exit. If you sold there, there's your exit. Okay? That's all. Cool. So, but the pound is a dog with fleas right now. Okay? Oh, nice. A little roll reversal. Okay, cool. Right on. We got ourselves a little roll reversal. This is where bears are selling. So it's a challenge of the market open here. Right on. So bring it down. Right now I have a buy order at 19. Nothing special about 19. It's just we analyzed this, if you recall, last week as a potential place to buy. And we had highlighted several places. And I think if I recall correctly, because I deleted them, but it's like essentially it comes down to maybe every 50 pips, right? I might take this bottom, this top, that bottom, and these bottoms and bring that across. Okay. So anyways, nothing really special there. What you want to see before you become a bull is that we start climbing. So these are like shot in the dark type trades. They're like testing the fence type trades. You remember the T-Rexes from, what was that movie? Jurassic Park. They're testing the fences. Yeah, just testing the fence. But right now, what do we know? Okay. We know we don't have enough to get through 120. We know the velocity of this is quite strong. Range, break, ranges until we break. Okay? Remember, you're going to stay in a range forever. Okay? That's what's in my book. You're going to stay in a range forever and ever and ever and ever until it breaks. So the way I would play this psychologically, okay, and that gives me the ability to buy even if it's a bit of a shot in the dark, right, is that we're going to be in this range now forever. So how do you trade a range? Well, you buy bottoms and you sell tops. You can do both if you want to, or if you want to maintain your long-term fundamental bias, you only buy bottoms or you only sell tops. Okay? Okay? You see what I mean? So psychologically, you're like, is this a good trade? Well, is it trending? No. Okay? So is it a good trade? It could never be a good trade under these conditions. Even if you made $1 bajillion, it doesn't matter. It's not a good trade now. Okay? But is it a valid trade? Oh, it's valid. Okay? But you're better off technically as a bear here, at least on the time frame that I'm looking at. Okay? Because can we call that a top? Yes. Can we call this a lower low? Yes. So what are we looking for now? Lower highs. Okay? Okay? Theta's like just scalping moments. Yeah. But there's an interesting phenomenon that happens when you rely on just scalping. I find flaws slowly creep into your trading. Or how about, let me say it differently. Flaws slowly creep into my trading. Okay? And so be careful. All right? All right? Just be careful is all I'm saying. Maintain the composure of being the trader you want to be. Okay? So if you want to be you want to be a fund manager one day, you want to be a hedge fund manager one day, you can't just be doing this all day, every day. And what can creep in is the risk acceptance that is sometimes required to be a scalper. Like you take it off the top because you can. You'll buy it off the bottom because you can. And you have to have a certain, I don't know what, to be able to do that. And very often, sort of a lazy creepness or laziness can creep into at least my trading versus, having a bias and a plan to build a portfolio. You don't want the lazy... like laissez, not lazy, but sort of relaxed risk tolerance that's required to be a scalper because it's a little faster and all that kind of stuff. You don't want that to creep in, right? This acceptance. I don't think I have the right words for it in English. Unfortunately, I don't speak any other language, so... I hope I'm saying something relatively intelligent. Just be careful. Just be careful. Okay. So I think ultimately what I'd like to plan is something like that. Okay. Okay. How big of a stop? Well, usually, right, a stop should be about 1/3 of your expected gains, for example. If you're day trading, okay, typically it's a 33.99 OCO. Okay. If you're learning how to trade and you're learning how to swing first, and remember, you need to be able to read the market to be a swing trader. So you have to keep that in mind. Like you only trade in certain market conditions. And the upside to that is that you have the market working for you. Okay. What I'm getting at is if you're learning how to trade, especially swing trading, I would start you out as 100, 300 OCO. And you're like, oh my God, Wayne, if I risked 100 pips, I would lose like 1/3 of my trading account. Well, you're over leveraged, son. Okay. You're over leveraged. 100 pips should be like 1/3 of 1%, for example. And of course, very few people use that little of leverage, but that's what I'd like you to be able to do, because here's the upside of the bigger stop. You have to be completely wrong in your analysis, or the market has to completely change, a complete change of trend, where you're really, really wrong to get knocked out and lose. Now, if you, I know some of you trade with like 15 pip stops or something, where you could just get unlucky. Wrong time, a little bit of news, a tweet went out, something happened, whatever. You can just get unlucky and get knocked out, especially if your entries are mediocre anyways. You can have half decent analysis, but mediocre entries and tight stops, and you're going to lose a ton of times, because now your entry has to be perfect. But if you're a newer trader, your analysis is not perfect, your timing's not perfect, your decision-making process is not perfect, and then you got a really tight stop, like there's a 99% chance that it ain't going to work. So the one thing that you could do is, if you had a 100 pip stop and you're going for 300, at least the luck part can be removed, where, you could be wrong for the next 3 or 4 or 5 hours as far as your timing, meaning exactly what price do you go long or exactly what price do you go short. But if you get the trend part right, the timing is not as relevant. I mean, you could kind of fart around and go negative, 42, and then you're, negative 18, and then you're negative 32, and then slowly by day 2 of this trade, you're plus 18, and by day 3, you're plus 76, and then by day 4, you're 128, and by day 10, you're approaching your right. And what you're doing is you're surviving the mediocrity of your entry, but you're getting paid by the correctness of your analysis. Okay? Okay? So right now, a short-term trader is just focused on, maybe I should even have it this way. Okay. What you're looking at is basic price action. Down, 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 up, up, down, 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 up, up. And if you did sell there, you're expecting a drop below 119. Okay. Let's see. I think I'm going to keep the powder dry on this one. I'm going to remove this. Okay. What you're looking at here is the down, 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 down. This is a range, right? Okay. Up, up, down, 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 up, up, down, 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 down. Okay. And it'll continue to do that probably until about here. An inverse head and shoulders would take this down to 18 or 1750. So we'll have to pay attention at that time. Okay. But I think as we move towards the end of the week, we will lose more and more volume. Okay. Okay. So I think this will be pretty interesting. But one of the things, or one of the ways, or let's say the way I'm looking at what we're observing, like how do I interpret this? Isn't that important? Like, I'm not teaching you like little trading tricks or rules or whatever. I'm trying to teach you how to think. And the reason I started with the Commitment to Traders report is that I'm looking at this as more and more traders leaving. So somebody bought here, okay? And I think they jammed their stop and they're walked away. So if we do hit their stops, it will set up an inverse head and shoulders, because that's the mechanics of it. They bought this here and then they went on vacation. Okay, so after a big drop, these were like, so it dropped before. I don't think I need to show you, right? I mean, what we're looking at looks like this. Okay, so there's this big drop earlier. That's traders exiting, going on summer vacation. And then we hit this like real low, okay, 1850. So some people bought it and then went on vacation. Maybe some of the people that got knocked out or jumped out, they bought back in. They're like 1850, good enough. So they threw down a trade and then they went on vacation. And I think this, okay, is more and more traders leaving this week for vacation. Because as we know, the most important day of the year is July 1st, Canada Day. And the markets are positioning for Canada Day. So this is, a few more traders leaving. I'm hoping between now and non-farm payrolls that someone else decides before they go on vacation, put some money into the market. Okay, kind of like this. That would be great, because that gives me my double bottom. Right before they leave, they're like, you know what, I'm going to take it. Boom. And then they leave. That's where the volume comes from. Okay. So this is volume here going up. This is volume here going down. Okay. And one little spike of volume increase. And then we go into the giant sucking sound of summer. Okay. So that's what I'm trying to anticipate, or how I'm interpreting this. It's not trading. It's some other behavior that's happening. Okay. So like you said that we're going to be here all summer, but you have to understand many, if not most, market participants will not be. Okay. Check this out. Explain this spike and this spike. It's exits. You see? Okay, these drops, right? This is people here exiting, right? Amazing, right? They exited right before the news. And then this spike here. It's not that everyone's selling, because you'd have this massive volume still going on. It's exits. So I keep asking myself, as well as challenging you to think about, where's the new money going to come in? When will we get these spikes as they come back in? Okay? And what will the period in between that look like? On says, so volume is important then. Not necessarily the volume indicator, but you have to understand that if you buy at this price, let's say you're a buyer, okay, and the market's coming up like this, the moment you come in, you have no influence for it to go to here. That's your trade plan, right? All right, so how will price go from here to here? You need more buyers to come in and buy. Okay? Or sellers to exit. Or both. But what if nobody's trading anyways? How are you going to get from here to here? So is volume important? Well, I'm suggesting like not volume as a, I don't know, there's a lot of trading systems that rely on volume to make decisions. I'm not saying that. What I'm saying is, how could you expect this to go from here to here, elevate in asset appreciation, if nobody is buying or nobody's selling? Like there's nobody even here. Okay? It's like the proverbial tree falling in the forest. Doesn't make a sound. Right? How do you get here without other buyers or sellers leaving the market? And you really can't. So I'm suggesting more of the market conditions and seasonality is super important. Okay? But don't say like 1, check the trend, 2, check the volume. No, by the time you see the volume, it's already occurred. Okay. Okay. But like, look at the big spike here, the biggest one. Okay. I talked about that, right? 4 months early to the exact day. So, early. Okay. So if you saw the spike and then said, oh, look at that, I should now do something, you wouldn't have the same edge as me saying on the 16th of June, 2021, it's going to be a key moment in time. Okay. Okay. Oh, Morena, I didn't say that. But what I said is there are not the same number of market participants. Okay? Jimbo, it wouldn't be Traders Way, technically. It would be their liquidity partners. Okay? But yes, you are correct. That's not the entire Forex market. But again, that's not what I'm saying either. Okay, so let me say it one more time in case I'm not making it clear. It's summer. You can't expect, if there's normally 1 million Forex traders trading every day, that there's still 1 million traders in the market trading every single day. Next week, for example, many market participants won't be around. So you can't expect technical analysis to be as reliable because technical analysis is a self-fulfilling prophecy. Also, you can't expect the same average daily range, the same volatility, the same trend mechanisms, because you might buy and we might have a bullish day, but then it dies at the end of the day because all the traders went away. In a normal world, there'd be more traders. Asia would wake up and say, oh, look at the rally, we want to buy. And then London wakes up, look at the rally, I want to buy, right? But right now, there's significantly less people. That's it. That's all. So you have to adjust. So it doesn't matter if this volume is only the liquidity partners of Traders Way versus the true deep liquidity of the entire foreign exchange market. It doesn't matter. Okay? I don't, Theta. Okay. To me, it's sort of irrelevant information. Okay? But you can incorporate it, but you should still you should see the pivots compressing. You should be, you should still be watching tops and bottoms for the day. And there's so much other information going on that ADR will only say, wow, we're losing some of the range. Well, yeah, it's July, bro. Of course, right? But if you're going to incorporate it as part of your momentum, right? If you're going to incorporate it as part of your momentum of identifying a strength of a trend, great. great. But again, there's many other ways to do it. So if you like ADR, it's fine. I think there's a lot of other things going on too. There's probably even better ways. Wait, that ain't working. That's funny. Oh, it's an equidistant. Wow, that's weird. Well, then let me do this differently. Insert, indicate, custom. Cool. So we're on an hour. One of the things you can do with the price action pivot points, of course, is change how many periods you're adjusting. So like if you're more of a day trade guy today, you change it to a smaller time frame. If you're more longer term, you want to change it to, have, let's say, 366 periods instead of 21 periods, and you'll catch bigger moves, right? So what this is suggesting is this, right? Oh, sure, Hope. Absolutely. Absolutely. Okay. Price action says this. Price action pivot points say this. Pivot points, market pivot points say this. So that's what we've been given. What do you think? Okay, that's what it says technically. Oh, why am I in here? It was something that we had planned a while ago. Okay. Let me try to pull this back. Take a look at the confluence. Okay. So it's a weekly central pivot, and it's in the buy zone for next month's buy zone. But nothing more than that, right? If I have Fibonacci set up, not quite right, but so I have a 3A2 Fibonacci retracement, weekly central pivot point inside the buy zone for July. But other than that, it's not really that great. Let me fix this a little bit. I have to do it eventually, so let me just do it now. All right. Okay. So, does that answer the question? Yeah, Hope's more interested in euro. Yeah, okay, yeah. To me, it's just a trade. There's nothing more to it than that. It's just a trade. I'm not making like a point. Okay. But you can see, right? So there's the trade. Unfortunately, I thought that would be a different color. It's just a trade. Cool. Yeah. All right. I guess I want to look at Kitty Cat here. Okay. So here's from before. We had this. Okay. We had this. We had the follow on. Okay. And now I'm very interested in seeing if that's going to hold or if it wants to do something like this first. Okay. I'm bearish on the US dollar. I'm bullish on the Canadian dollar. I'm bullish on the Mexican peso, right? So I'm looking at the trading partners with the United States. So as the United States does better, it'll do more business with Canada and it'll do more business with Mexico. That's the basis of, or let's say the thesis of my trade. Okay. So if this doesn't hold, okay, so that's a sell, by the way. If that doesn't hold, then I have to pay attention to that. So plan A and plan B. How many people find that helpful, going through that thought process? Anybody find that helpful, or is that sort of obvious? Right now, 124 is the short. Technically speaking, that's the price. Now that'll probably adjust between now and later. Okay. Well, right now, less than half the people watching have clicked the like button. Would you please do that? All I'm asking is that you tell YouTube this is quality content. Okay. Thank you. Okay. So now you incorporate this USD Kitty CAD. Is there a short? Because in this zone, there might be a short, but using price action, we know the area is sort of in here, right? Make that a little lower. Okay. So there's a plan A, plan B inside the bigger one. That's what we call day trading, right? So now in the smaller time frame, you're looking at that, right? So that could be A, this could be B, and then the ultimate top is C. Bulls have it different, don't they? There's just this. Right on, Mark. Yeah. Okay, we'll go through the yens. Go through the yens. Okay, cool. All right, first thing you have to say, are you a bull or a bear? Why don't we do a vote now? Are you bullish today, this week, this month? Okay. So what do we have? 84 is a sell. Okay. 83 is a buy. Okay. So I'm breaking it down into digestible pieces, right? Okay. If we breach lower, it gets much more complicated for a bull. We know this is a 382, this is a 50%, this is a 618, or something close to that. We know the ultimate is a double bottom here at 82.5, maybe even 82. Okay. $84.50 is July M2. How do you choose so far down to sell? Please restate the question. I must have missed it. Sorry. So this is the sell, right? Okay. And based on that analysis, we head down to 82. So is this coming all the way down to 82? What do you guys think? Oh, that's good coffee. Well, the interesting thing is I'm seeing the risk off. You guys are saying risk off. I'm nitpicky on the terminology because they mean different things. Removing risk and trading risk off are two different things. So I think what you're saying is because people are leaving, they're taking money off the table. They're taking risk off the table. But they're not, and I'm trying to get to this, they're not selling Aussie yen per se. But this idea of based on, let's say, yen weakness or something, they're taking a break from that. And so if they exit these trades, it'll come all the way back down. But it's not a risk-off mode. Further shutdowns, okay, I get that. So you could be playing that. You could. So, I mean, it's going to come down to opinion on bias anyway. So I'd just be careful. I don't think we're in that mood right now. But maybe other countries, like maybe, your neighborhood, my neighborhood are two different worlds. And they're both correct, but we see what we see, we hear what we hear, we observe what we observe, we interpret what we interpret, and then of course our standard biases come along on that journey as well, and so essentially based on our my theory of relativity, Einstein's theory of relativity. The point is, what you're observing is relative to your position in space and time. And what I'm observing is relative to where I'm positioned in space and time. And we may have completely different observations. In particular, not just the observation, but our interpretation. And that's sort of like behavioral finance is that it'll state things like, you and I could see the same data and make completely different decisions as well. So, whatever. So I'm not here to say you're wrong and I'm right. I'm just saying it depends, right? And that's why there's bulls and bears. And that's why there is inefficiencies in the market. Okay. If this was just a carry trade, then everything would be easy, right? Okay. The delta third wave is perceiving the fundamentals. The fundamentals that created this still exists. So the way I look at it is sometime and some price in the future, I will do that again. I don't know the exact moment in time, and I don't know the exact price. Okay. You see? So what we do now is our individual decision-making processes. Okay? And I know what I intend to do later, and the now is a little less relevant. But if you're selling this down into here, I get you. It's totally fine. Okay. The level of 2018. Whatever. When you're backing out that far, technically, I think you're stretching. If there's weakness in the Aussie because of a shutdown of the economy, then that's one thing. Okay. We also know seasonality, that this is a time of year where yen tends to get stronger. I get that. We already know all of this, right? So if you're going to play it, play it. Okay. but at the same time, don't lose sight. See, let me put it a different way. If you work for me as a hedge fund manager, in this case, I'm the hedge fund manager, you're the portfolio manager, I will give you a task. Okay? Hope only sells this. Raymond only buys this. All day, every hour, every minute of every day, of every week, of every month, throughout the entire season, they're going to do this. One's going to be a buyer, one's going to be a seller, and because of their laser focus on strategy, they'll always be perfect or near perfect in their execution. And over the period of an entire year, the performance of them individually will be profitable, but combined will be very profitable, but also with low volatility. So in a way, I'm sharing this with you because in a way I'm trying to train you to do that now. Instead of going, oh, well, I can do this. I can be short-term short, long-term short, and long-term, but dip, this started, that started, dip. I'm trying to get you to be consistent. Okay? Now, you might underperform in July and August, right? Or let's just say July. You might underperform in July. But a bear's going to sell at tops, a bull's going to buy at the bottom. And then you manage your risk. There might be small losses and small wins, but it'll be just absolutely fine. I'm more concerned, and your investors one day will be more concerned, especially the more sophisticated, larger investors that you get over time. They're more and more worried about, not this month, maybe this year or the next couple of years is what they're focused on. Okay? When you start in the beginning, your non-sophisticated, poor investors are going to be worried about what you did this week, what you did this month. But the bigger ones are more concerned about the longer term and how you fit inside of a balanced portfolio anyway. So I got to get you to being consistent, right? So that you can have very good execution, because you're not debating whether you should be a buyer or seller in Asia. You're not debating whether you're a buyer or seller today. You're not debating whether you're a buyer or seller this week. You're not debating whether you're a buyer or seller this month. Okay? So if you know technical analysis now, it's either technically a good buy or it ain't. And you're like, nope, done. Okay? Same thing on the sell. If it's great, you see it. And no one's going to fight against you because it's such a good entry. No bull would buy there, so only a bear would sell. But over long periods of time, you're going to have a consistent thesis. Like someone can read your trading history and say, oh, I know exactly what they're doing. But on the other side is you're going to have very low volatility. I'm telling you, the key isn't how much money you're making. And I think, by the way, if you're trading both ways a lot, you're going to end up being very inconsistent. Okay? Because you're applying inconsistent strategies to a somewhat inconsistent market, and there's no way you're going to get consistent results. It doesn't make sense mathematically. Okay? So if I can then somehow make your trading make sense, maybe the market doesn't always make sense, but maybe if I can get your trading to make sense the way you can read what you're doing on paper, and also because of that consistency, you also get lower volatility. Then as now the manager of the fund, right, I've provided value of the low volatility, which will be very attractive to investors. Okay. Also, you now as a portfolio manager as part of a team, I can organize traders into thematic strategies. So like if I do a risk on global growth macro strategy, well, whoever is long Aussie yen could be put into that portfolio. Who's ever long Aussie US dollar could be in that portfolio. Okay? So basically I can create a fund that's all short yen or all short dollar or short both yen, short both dollar. And I can put that together and then package that up and sell it. Okay? So that's why I keep saying this. I'd rather you have the consistency. I got to pull you out of the mindset of, you're making trading decisions because you need to pay your cell phone bill. I'm like, dude, that might be the case, but you're going to keep being small. I want you to focus on making $1 million decisions. Okay? I want you to think big. Even if you only have a small trading account, I want you to think more like you're managing millions of dollars. Okay? I want you to make $1 million decisions. And that's why I was kind of saying before, like, don't get confused on turning short-term trader through the summer and pick up bad habits and then kind of then be weak going into the big time of the year. Okay? Right? All right, on. Good job, Gisa. Yeah. So anyways, all right. So I'm just, like I always say, be careful. If I were me, okay, I would have multiple accounts. One for short-term trading. Let's say your day trading account. So you can day trade, spot trade, and scalp in that account. Now that's tricky if you're an American because, FIFO and all that kind of stuff. So, whatever. But maybe in that situation, let's say you have a scalping account. I would recommend that you open that up as a fixed spread because you'll always get a fixed spread versus like one that can spike around news. Okay. Then you'd want another account for, let's say just one for scalping. Then you have another account only for day trading. Okay. And then maybe you fit day trading and swing trading in there. Okay. And you kind of do that. And then you have another account that at least even just for testing, you have an account where you're really focused on this idea, like, can you make a multi-year decision? Okay. Wouldn't that be an interesting skill to have, guys? What if you could make a decision that is multi-year in its value creation? So you would have a position account where you should practice that. You should practice that where you enter trades, remove the risk. How long can you keep the trade open if you're trading fundamentally, right? Gisa, I think they're trying to tell you to settle down. Pop a squat. Relax, bro. Okay. Cool. So this is a weekly swing to the downside. And these double lines are areas of opportunity. Yeah, well, Mr. Kennedy's like, hey, if I can make a single decision, you sit on for 2 years and while you're on vacation, all that, blah, 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 blah. Yeah, but that's what position trading is. Okay? So, for example, when Australia recovers from COVID, where COVID is a thing of the past in Australia, can you make a 5-year decision on economic growth in Australia? And if so, can you ride a trade that long? See, to me, Mr. Kennedy, it's not even 2 years. When you're looking at a business cycle, barring any exogenous shock, a normal business cycle is like 8 to 12 years. So one of the things I teach you guys is to try to figure out where we are in the business cycle so that you can try to figure out how long to hold a trade. And 2 years, may be too small, Mr. Kennedy. Thank you, Hope. Well, I do spend a lot of time thinking about, myself, of course, right? But also you. And then one of the interesting things I ask myself is, okay, what do I know? What do I think? And why do I think it? But then I try to what are you guys going through? What's your interpretation? What are your fears? Because I had the same fears. I've gone through the same processes. And then, what would I need if I only had a few years of experience, right? Like, what would I need here? And I relive your journey, and I, in many ways, go on your journey with you, even though I've been down the path before. It's similar to my son and I are watching The Walking Dead. We're now on season 8 or something, and there's 16 episodes per season. And I started over from season 1, episode 1 with my son. And imagine having to go through 100 hours of Walking Dead. And so last night we watched one, and he's like, do you really want to watch it, or are you just killing time? I'm like, dude, come on. That's smart, but still, dude, it sounds like he's the dad and I'm the kid. Oh, come on, Dad, I just want to watch The Walking Dead. I said, son, look at it from my point of view. I've watched 92 hours of Walking Dead with you. I'd like to kind of catch up to where I left off so I can see something new, right? Imagine the patience that takes. But I'm going through the first 5 and 10 year journey with you again. And so it's really great to have that thought process where I'm thinking about my own hopes, my own fears, my own learning experiences, my own mistakes, and then say, okay, so I got to deal with that. But then what are you going through? And good, bad, and ugly. And what did I already learn? And what would I like to share? And all this kind of stuff. And so that's all, right? So did I meditate on price and investing and all this? For sure. Also, here's an interesting, one of the reasons I value education. Okay. Remember, I've spent more on education in the last 5 years than most people spend on a Lamborghini, and not a used Lamborghini, a brand new Lamborghini. Right? Cool, right? Right? So no, I don't drive around in a yellow Lamborghini for people on YouTube so that you can love me. But I'm in school. And so there's a benefit to that, Hope. And one of the things I was doing this week and this weekend was in the Oxford program on algorithmic trading. We had this speaker who's a quant at, I think it was Man Financial. He was the chief data scientist and strategist for this multi-billion-dollar firm. And he was talking about how he builds a momentum algo. And he's like, this is the easiest one you can do. And he went through the process. And the first thing he says is, okay, let's say you're looking at 100 different markets. He says, well, first thing you need to do is adjust everything for price, because if you're trading oil at $87 a barrel and the S&P 500 at 42 something and gold at 12,000 whatever, and all of a sudden you're like, none of that makes sense. You can't compare these things. So the first thing you do is you adjust a normalized price on a scale, right? And so you can get a relative scale. And then, right, and then he's like, and then you got this, right? So now you got something that looks like a scatter plot, right? And then he's like, and then you got to go through and connect the same amount of dots throughout the noise, right? So there might be 100 prices over the last 5 years, let's say 100 prices of 100 different markets, right? You might connect 100 different prices here, normalized, right? So gold is equal to euro dollar, is equal to Bitcoin, is equal to oil, okay? And maybe even things like real estate. I don't know the 100 markets, but you can get pretty clever, right? And so normalize, and then you take the strata. So you're probably thinking, right, there's a bunch of things that you could do in here, like the mean price and the average price and the standard deviation. But that's what you're kind of getting to, like let's say 2 standard deviations above, 2 standard deviations, and you're going through here, okay? And then, right, so now you got the standard deviation of this, the mean, right, and all that kind of stuff. And then you want to take inside of this, adjust each one of these for vol, right, for volatility, because you want to see not only what is the average price and is it 2 standard deviations, but based on momentum, how overbought is it and how likely is it to continue overbought, being adjusted for volatility, right? And then he says you end up getting something like looks like this, right? But then the scale gets smaller and smaller and smaller. There used to be a scale of -5 to +5, right, to 0. And now it's like 0.5 or -0.5 to +0.5. And you get this kind of this thing. And he's explaining all of this. And he says you might have a momentum indicator that you want to just jump off the page and scream buy. And he's like, it's so subtle that you probably will miss it. But even if you see it, now you have to go back and test a bajillion different ways to ensure that that indicator, the trigger for you to buy that says momentum, which is another way of saying trend, that the trend is resumed, right, has to be tested multiple other times to prove that it actually exists. Okay. And he's like, and this is something like many hedge funds have been doing for many years, even decades, and have proven to be successful. And he's like, this is the easiest of all the momentum strategies. And the strategy itself is, just one of a very, small amount of strategies available. And of course, I'm looking at that going, well, why don't you just listen to the Fed? The Fed says they're enacting a policy that's going to weaken the US dollar. So why don't you just sell the dollar? Right? Like, it's interesting to go through all of that, right? And compare to what we do. Okay? And it's interesting to see these guys that make money, like make money, but they're not trying to do much of anything different. Like, I'm not talking about high frequency traders that inside of, noise make very quick trades in and out in seconds. These are standard momentum traders, standard hedge fund managers. Like, momentum means you want to keep buying the dip, even though the S&P 500 might be extremely overpriced, but it's likely to continue to be overpriced, meaning it will continue its momentum until it stops. Now, one of the things I want to teach that machine, because remember, they're teaching algos, they're writing algos to do all of that math, which is pretty incredible math. But I think if you can program in something simple as much of the market is likely to leave between the June Fed meeting and July 1st, like, can you predict when the momentum trigger shows exit before it happens? And if so, can you place more weight to the resemblance of an end of a momentum? Like, let's say instead of a trigger to buy, there's a trigger to take profit and get out. Can you teach the machine to anticipate it before it happened? And if so, place more weight on that decision that it's making. And I think that's what, we can bring to the market. But ultimately, if those are the decisions trying to be made, can't we also make it more easily? Do we really need that level of insight into, dude, are you going to buy this or not? Do you need that level of math? I don't know. But it's fun to explore it. Yeah, Hope says a little manufactured and odd. Well, but there's a process of learning. Like, imagine what we're trying to do every day. Okay? And what they do every day is similar, if not quite the same, like more than similar. Not identical, but close to it. We're trying to buy assets that appreciate and earn income. And we want to do it without taking on too much risk, right? That's what we're trying to do. That's what they're trying to do. But they're coming in from a absolutely, well, maybe not. I was going to say radically different point of view, but maybe they're not. They're just the process of the view. In this case, data mining and machine learning is exotic compared to what we're doing. What I do and what I teach you is, I wouldn't call it big data, but we're taking in fundamental macroeconomic data for economies around the world. And from that, we're extrapolating the flow of money. And we also know that money doesn't flow just for the sake of flow. It's sort of like, buying a cryptocurrency that you can't spend. Well, why did you buy it? Well, I think it's going to go up. When it comes to foreign exchange, typically the flow of money has to do because of a purchase. You understand? So if money is flowing across a border, that changes the value of the currency, but then an asset is purchased. So we're tracking, okay, how's the United States doing? It's doing good. So are Americans going to buy the same or more or less Christmas presents this year than a typical year? And if so, where are they buying the Christmas presents from? Where are they being manufactured? Okay, well, so if they're buying, a normal level, okay, a normal level of money is going to leave the United States and go to wherever it's being manufactured. Where is it being manufactured? Let's say China. So now the Chinese currency will appreciate, the US dollar will depreciate. Okay, in the process of making Christmas presents, you're going to need plastic and copper and gold and all that kind of stuff. And if they're building new factories to handle the new orders, or if they're adding new machinery, where's that coming from? If they need natural resources, the iron ore, the coal, the steel, the plastics, all that kind of stuff, where is that coming from? Oh, well, maybe some of that material, the raw material, will come from a place like, let's say, Australia. Okay, so now we follow that money. So the money went from the United States to China, from China to Australia. So the US dollar weakens, the Chinese currency weakens, and now it ends up being the Aussie dollar strengthens. But we also know the value of coal might have gone up. The value of iron ore might have gone up. And because of that, the increased macroeconomic activity, we can track things like the shipping cost of the bulk dry good boats that actually travel over the seas. We can even track all of that. Okay? And of course, if the factory is running at full capacity, demand for electricity will likely to go up. If people have wages going up, consumption will go up, diets will change, more protein will be consumed. If more cows are being consumed and more chickens are being consumed, then all of a sudden feed like corn, like soybeans, that starts going up. And then the cost of fertilizer needs to go up, which means cost of nat gas goes up. And all of a sudden, wow, this is all interrelated. Yeah. Well, they're looking at it too, but from the numerical point of view, you won't even know, based on what I'm learning at Oxford, they don't even really know what they're looking at, because they take all that information and chop it up into mush and smash it together and say, look, right? Like Play-Doh, like, look, I built something out of Play-Doh, where I'm trying to track the humanity behind the trade, not the mathematical equations and the anomalies that you find inside the noise of big data. And I'm telling you, literally it looks like a noise. It looks like a shotgun chart. But instead, I'm like trying to track the humanity. Okay? But they'll see what I see. And if you understand the math, you can see what they're looking for and all that kind of stuff. But I think being challenged to look at it differently will benefit us all. And if you don't mind, I'll pay the thousands of dollars for the class, and you can be here every day. How does that sound? Okay. Olin, right now, we're still doing behavioral finance, and they even went over technical analysis and stuff. So I was done the first week's worth of work, in a day and a half, just boom, boom, boom. Like, oh, technical analysis, skip. Behavioral finance, skip. Like, I just knocked it out of the park. But that's what the Wayne do. I mean, I have background in that, so not a problem. There's going to be points in the near future where it's probably going to be extremely dense math. So we'll see. And I think most of it is statistics. But inside you're only using the statistics to break down the big data so it's digestible. And you're like, so we'll see. We'll see what it gets to be like. Cool. So anyways, look, you're at the top. If you're a bear, sell it. No, Olin, there isn't a book. No, there isn't a book. No. But I can tell you so far, the course seems to be much better than the MIT course I just did on cryptocurrencies. This feels better. I kind of want to go to Oxford. Maybe I'll teach at Oxford. I don't know. It just seems really cool. It just seems better, more prepared, better, just better paired, better written, a little more there. The MIT course had sometimes it wasn't very cohesive. Okay. Cool. All right. So Miguel wants me to call a trade. What currency pair do you want? That's all right. Miguel, what do you want? Let's do it. Polish Lati. Come on, Miguel. Let's go, Golden Child. Aussie CAD. All right, let's double check this. Aussie CAD. Aussie is weak. CAD is weak. It's a stupid trade, Miguel. Sorry. Not interested. Pass. But there's my call. Don't trade it. You'll be fine. Give me another one, Miguel. Let's go. Cool. You guys see Bitcoin climbing back up over the 34. Coolio, Coolio, Coolio. Okay, we want to maintain integrity above here. Don't really want to retest anything lower. Okay. Yeah, right. Yeah, I'll do it. No, guys, I wasn't being bad, Miguel. Miguel asked me what to do on that, so it was dumb. So there was the call. Don't even consider it. Miguel wants beast. Okay, let's do that in a second. But Bitcoin, you can see, is slowly climbing up. Binance is in trouble in the UK. Trading exchanges in China are in trouble. So I don't know if this scares people out. I don't know the fair market value for Bitcoin. We'll see. Well, I mean, what can I say? It's not trending. Okay, it's not trending in the moment. So I'd be cautious that there is a top and we retest this bottom and top and bottom, top and bottom. Okay. So right now it's a mediocre setup. Maybe you caught it in here. Maybe you traded it over the weekend. It's hard to really say. But now, I think a trend trader would say kick it off the 21, but we're not trending is my point. So the market is technically bullish here, but it's technically bearish there. And it was technically bullish here and technically bearish there, which means if you add them up, nothing's actually happened because it's not trending. So just be careful. So I have it. I'm in at 30,000. Yeah, right. Yeah, Miguel, if you're a trader, there's nothing personal. It's just a trade, right? I try not to be rude. But anyway, so what was the other one? You wanted Beast. All right, let's do Beast. I thought I already covered it, but maybe I didn't. Okay, cool. All right, so let's take a look. Okay, are you a bull or a bear? I don't even know what that is on, right? Or, Miguel. Bull or bear? Okay, bull. Now, the interesting thing here is it's neither bullish nor bearish. Okay? Because you have this going on, but you have that going on. I'll do this one in different colors. Okay? So it's both this and that. So there's a caution there. That's just right off the bat, there's a caution there. I have this set up bullish, all right? I have this as a potential. This is the buy zone in here, okay? And so what you're looking at is the up, 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 down, down, buy. But like I said, right now the odds are probably 50-50. The yen is a little strong right now for seasonality reasons. The pound is weak right now because of, weaknesses in the economy, particularly if they don't open up the economy. What's the number now is June 19th or something. So, this is a cautionary tale, I think is what I'm trying to say. So there's a little bit of a buy there. I wouldn't put a lot on it because I think whoever sold here has a legitimate sort of move. So here's what I would do if I were me. Okay. I would look at the smaller time frames and try to get some sort of technical confirmation of up. Okay. So you might want to try to trap things now. So you do like that. And say if you're a bull, you probably want to see it kick off this 54, come up, and then kick off of here. Because now on that higher time frame, remember it looks sort of like this. Now you would have that. Okay? So what's happening is there's a lot of fundamental reasons for this to fall. There's a lot of fundamental reasons for this one to rise, which means this is quite reasonable. It doesn't mean you can't buy it, but I'd like to have a level of confirmation. This little 1, 2, 3 would be helpful. So you could buy it around 54. I know we're right below it, but that would be the first stepping stone, if you will, right? That'll get you to about here, 54.5. So what'll happen is it'll go up, it'll come down, it'll go up, it'll come down, it'll come up, okay? And maybe you continue and you'll be challenged in here. But right? Okay? The number I had earlier was 53. And that still seems to be the reasonable number. Okay? So I think you're facing quite a challenge as a bull. Now, let's change this to a bearish point of view and see how you feel. Okay? And I'm going to go to bearish mode. Okay? And you'll see technically it's still reasonably bearish. And what a bear is expecting is a breach, pullback, and breach. So my first shot is, 53 might be interesting, but we face this risk of, 51 or even 150. Yeah, we changed last week, Mr. Sangam, 9 a.m. Okay. See that? Really what you want to do before you're a bull is you need a series of higher highs and higher lows. And the real series of higher highs and higher lows do not take place until we breach above 155. I'm not saying you have to wait till 155, but you got to be careful here. The bears are still clearly in control. Okay? So wait for the evidence is what I'm saying. And once you start getting on smaller time frames, small uptrends, then I'd feel more confident in going long. Okay? I also look at this like I explained earlier. I think there's more of a propensity for money to leave the market than enter the market. I don't think people say, hey man, I've been keeping my powder dry until July and then I want to get in. What do you guys think? Are there any hedge fund managers that have been thinking that way? Oh man, I'm saving all my money for July. Well, Mr. Sangam, I know 2 hours is a little long. I should probably pull the plug, but okay. So if more money is going to come out of the market before it starts coming back in, then this is reasonable. Okay? That is reasonable. If money is coming out. Okay? Remember, you can be a bear as long as it's not bullish. But isn't that what... See, technical analysis doesn't tell you what to be doing between now and the end of the year. Technical analysis tells you what you should be doing now, or really what prices. So like there are bulls in this market, but they're down here at 51. And we know bears are intent on keeping this lower. Okay? And as money comes out of the market, it's more likely to lower. Okay? Okay? And going back to Miguel, good thing you didn't buy it. Okay? It's dropped 30 pips since we were talking. Okay? So you're a bull, but the market's not bullish, so you should be cautious. Right on, Mr. Sangam. Mr. Sangam, bring me a dream. Okay? I want to be a bull when the new money comes to the market. Okay, that's when I want to be a bull. I anticipate traders wanting to buy when they return. And when they are leaving, all they're doing is no longer buying. Okay? So when this is falling, the dollar is likely to be strong. I've covered this 100 times, probably more. I would say certainly more than 100 times, but let's just revisit it. This is showing us money, the flow of money. Okay? So as this is falling, the dollar is being challenged. Yeah, Joe, there is not an assigned textbook. They write a lot of it themselves. And then there's, read this, read this, read this, read this PDF, read this article, read this. And then speakers come in. So far we've had maybe 2 hedge fund managers and 1 hedge fund quant. And of course the professors are Oxford professors in mathematics and trading, finance. All right, so I want this to go up. Okay? And when this goes up, that tells me people are putting more money into the stock market. And this will go up, by the way. Oh, it will go up. Okay, that's where we are. So, okay, November, what were we doing November? Buying euro dollar, buying euro yen. Up, 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 up. Okay, then we're at 1.75, let's say. 1 3/4. Okay, and it's been stalled out since the middle of April, stalled out, even slowly coming down. 1.75, 1.65, 1.6, okay, 1.5, even lower than 1.5 now. Okay, and I believe this will continue for another 6 weeks, 7 weeks. Okay, and then it's going to go up again, which means I'll be buying euro dollar and I'll buy euro yen. No, I didn't go to Oxford. Like Harvard, I lived at Harvard for weeks on end, months. It's almost like a home. I miss it. No, Oxford, no. But it's just one class, right? Like I took something like 42 classes at Harvard. Like ridiculous. This is just one class. And I wish it was there, because very often they're outside and it looks awesome. It'd be great. I've heard when you go there during the physics program on your first day, they take you into the old library and they bring out the original handwritten notes, right, about physics. Literally handwritten apples falling out of the tree and stuff. And you're like, no way. Yes, Sir Isaac Newton taught here. So let's go over his notes. And you're like, no way. Okay. It's like in my accounting class at Harvard Business School, I think it was, HBS has their own library. Was it Baker? Which is nice. It's a nice library. I've studied there once or twice. But anyways, during that accounting class, I think in the first class, they're like, this is the oldest double ledger accounting book in the entire world. And as far as humanity knows, this is the first time it was ever done. It's from the Medici. You're like, no way. They're like, this is it. The first time it was ever used, double ledger accounting. You're like, no way. Handwritten and everything. And they have it. Like, it's in the library. You can go look at it. You're like, no way. So I geek out on stuff like that. Right. I've read the first edition of The Wealth of Nations by Adam Smith. Harvard has it in the Hoyton Library. And I had to have white gloves and I had to get a permit and I had to take a class. Not a class. I had to be taught how to open the pages properly and all that kind of stuff. Like, no way. Awesome stuff, man. All right. My WTI. Sure, I'll do that. My WTI. Okay. So we are at a selling pivot. Okay. Is that an area of concern? Yeah. It was an opportunity to sell or, whatever, take profit. But let's try to see. Okay. This is what momentum is all about. Is there more opportunity for this to head up? Momentum is another word for trend. So if you're hearing about momentum stocks that inherently are trending. Okay? You don't buy them because they're cheap. You buy them because you think they'll go up in value because they've been going up in value and you think they'll continue. So with WTI, I asked you several weeks ago, is it to make a decision, is this going to $100 a barrel or not? That'll impact your outlook. Okay? And then the way you use technical analysis is you say, how is it behaving? Okay? Does it have momentum or is it losing momentum? This is a slowdown. I talk about in my book, the importance of it. Okay? But it's got so much momentum that even despite that blip on this time frame, it seems to be continuing to go up. So in your decision-making process, you should probably ask yourself, what did it do here, 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 and what will it do now? Okay? Okay, that's one. The next thing is what time frame's in control? What do you think about it on a daily basis? Holy smokes, huh? This market turned bullish October 2020. Now, we've been since about that time, right? This is right around, actually, this might even be November. I'm trying to get this crossover. Yeah, it's the day of the election. Look at that. Cool. We're right around the election. Okay. And this is the Fed, by the way. Okay. That's the Fed. This is the day I made the declaration of sell US dollar for 5 years. Okay. Anyways. Cool. So what can it do from here? Well, I'm going to continue observing this from a 4-hour chart. And the way I analyze this is still a buy zone. Between 72.5 and 73, it's a buy zone. Okay, for those that wanted the WTI, there you go. You have to decide, where are we going? Are we heading to 100 or not? And if so, do you have reason to be fearful? Technically, not right now. If there are bears, they're here and they're selling this, but we haven't validated it yet. Okay, if you're down here at 72, 71.90, okay, then you've validated that there's been a significant change in direction, but that has not been validated right now. It's fear, but not logic. All right, guys, well, that was 2 hours and 8 minutes. I think we should call it a day and leave something to talk about tomorrow, huh? So I hope you're doing good. I hope you're feeling good. I hope you're prepared to get through the summer. I want you to be light and airy through the summer. I want you to think about thinking and challenge yourself in different ways than just sitting down and trying to trade. I think you'll be frustrated if you just sit down and try to trade all day, every day. I think you'll also be frustrated if, like, you're trying to trade like it's normal. Okay. Well, you guys like the hair's cut? Is that Ray Day? Oops. Huh? What do you think? A little too short, maybe. All right, so thank you for being on my team. Thank you for being part of the community. Please subscribe, please like, please comment. Please visit tradersway.com and open up a demo account. Just thank you for everything. I will see you tomorrow at 9 a.m. right before the stock market opens. Lots of Fed dudes speaking today. Wednesday we have ADP and a bunch of other things. So once again, double and triple reaffirm what you want to be doing, but try to explain the behavior of the market. Don't just trade because you see a 5A cross or something. Little things like I heard today, risk off. No. Trades are coming off. It's not a risk issue. It's still risk on. Money is still free. Money is still available. There's still investment opportunity. There's still growth ahead of us. There's blips in the matrix, but I think everything you're looking at is seasonality and to be expected. But down doesn't mean risk off. It means people buying treasuries significantly and selling the stock market significantly is a sign of risk off. That means reversal of the flow of money. I don't think we have a reversal of any flow of money. Okay? So, try not to lose a whole bunch of money now. Save your powder. Keep your powder dry. And maybe over the next few weeks, we'll get some good opportunities to trade with the money flowing in. So just think it more like money is flowing out, but nothing fundamentally has changed. Okay? Keep an eye on the closures, though. That does change things on the short run. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. I'll see you tomorrow. Cheers.